Oh, there's Gary. Okay, there's Gary.
We got Gary in the house. We mentioned you the first time, Gary. You just showed up.
I know, because we were talking about it. That's what happens. Talk about Gary.
What are you thinking, Gary?
Well, they missed, obviously. The earnings were a beat by a couple cents. They missed versus my $1.09, and I know I was low versus most of you guys. They missed on auto gross margin, which came in at 26.8 versus 27.7. That was the street. They missed on revenues. They didn't talk to fourth quarter deliveries, but they said very wishy-washy, 50% deliveries over the next couple of years, which is what they've always said. But the problem is the beat is a low-quality beat. If you look at the tax rate, it was 8.3. I had 15. I think the street probably had 15. And they held SG&A flat. And I had about a 25% increase. So everybody's going to look at it and say, yeah, they beat, but it was a low-quality beat. And they missed on the most important metric, which was auto gross margin. And, what we don't know is, when they missed on the volumes a couple of weeks ago by, 18 or so, maybe it's reverse operating leverage, that they just didn't, they didn't get the auto gross margin that they thought they were going to get. So I think the market has taken the stock down about, 5%. That feels about right to me. It may fall more if they do a lousy job on the conference call. They got to let people know what happened with deliveries in the third quarter. So specifically what happened in China, why the order book, went to zero. They've got to talk about fourth quarter volumes and how they're going to navigate the EV credit going in place on January 1st. And they got to talk about this delivery wave, which we were looking at this picture on page 21 that's in the deck. And my partner, I said, "What did Elon's son draw this picture or what? It looks kind of goofy." So, I can't be positive. It's not a good quarter. I don't care what anybody says. It's a low quality beat, and they missed on the most important metric, which was auto gross margin ex reg credits.
Gary, your camera's shaking. Are you having an earthquake over there? It's like
yeah, sorry. I'm on my phone.
Okay, gotcha. Any thoughts on what Gary just shared with us? Anybody have any sort of thoughts? Anything they want to share?
Yeah, one thing on auto gross margin is I calculated that if you back out the foreign currency hit of $250 million, then auto gross margin would have been about 29.2%.
Yeah, did you factor that in, Gary, the FX?
Yeah, but everybody factors that in. That's not, they still missed versus expectations. And we didn't have 250, but, they missed. They missed versus Wall Street. And Wall Street does, put in some FX currency. It's about half, U.S., half non-U.S. So I don't think you're not going to get a buy because of that. That's what you're suggesting.
Yeah, I actually agree with Gary. It does seem like a low quality beat to me. I mean, I was assuming 230 on the FX hit this quarter. Came in pretty much right there at 250, and still auto gross margin was way lower. So the ASP seems like the biggest issue to me. The price increases just weren't there. Margins on the energy side of the business didn't improve. Margins on the services side didn't really improve. I was expecting a lot of kind of improvements quarter over quarter that didn't really materialize. That's I think there's reason to be excited long term, like Ross was talking about. But I think in terms of Q3, not at all where I was kind of thinking and hoping it would be.
Yeah, but I still think it goes back to the fact that everybody's pretending like we're operating in some sort of like normal environment. Like you've got to factor in the ridiculousness of just even trying to do business in China right now, and the fact that they've got these factories in full bore in China, and every day I'm worried that China's going to shut something else down or this or that, and then just getting commodities and auto gross margins are certainly going to be impacted by the different challenges that everybody's facing in supply chain and everything else. And that's where I think, Wall Street tend to, sort of set this bar, but nobody on Wall Street ever built a damn EV. They have no idea the challenges that they're going through. So they go, they missed on this and they missed on that. I'm like, you get in the goddamn factory and build one of these cars yourself. They didn't miss anything. Okay. It's amazing what they've done. And that's what I think where Wall Street expectations are very misleading for investors, because these are expectations, but they're not realities. And if people's expectations are wrong, maybe the people making the expectation is the problem, not necessarily the company. And so I think as a business owner, this is one of the most challenging years I have ever faced. Okay. And I've talked to people at every company, different types of companies. It is one of the most challenging years businesses have faced in as long as I can remember, since basically COVID. And well, that was recent, I guess. But
Ross,
it's more challenging coming out of COVID than it was going into COVID, I guess. I don't know.
Ross, your whole, however long you've been talking, 2 or 3 minutes, you didn't give a single number, and Wall Street's driven by numbers.
That's right.
You can poo-poo it all you want. It's not qualitative gibberish on Wall Street. They're going to look at the numbers, and they're going to say 26.8. The street was looking for 27.7, and they missed. And,
right.
No,
and you were looking for $1.09, and I was hoping for
ignore that. It's a
$1.05.
40 multiple stock, and you missed, you're going to pay the penalty. So you can wave your head and say, well, Wall Street doesn't know how to build a car. That's true, but it's based on math. It's based on numbers. And if you miss your numbers as a high PE growth stock, the market's going to punish you.
Have a PEG ratio of 0.5. You think that number is correct?
I don't think it's correct. I'm a long-term
right.
but
so what numbers missed?
Don't be delusional. Don't say it's a good quarter if it's not a good quarter. That's all I'm saying. It's not a good quarter.
Not a bad quarter. It's a fine quarter. It's an average. Earnings were up 70%.
I'm saying relative to expectations, just like the deliveries a couple weeks ago. But
it's like being married. It's like being married. I'm never going to reach my wife's expectations, Gary. Come on.
Well, then you married the wrong woman.
Live based on my wife's expectations. If that's not going to Wall Street's expectations, you're never going to be happy. That's why you guys are never happy. You're never going to be happy. I say, I'm twice as good as I was last year. I'm twice as good. I thought you're going to be 1.5 times
expectations, less performance. So you must not be performing.
Listen, babe, I got 2 kids. All right.
I have 3. I have 3, Ross.
I've never seen your kids, Gary. I got pictures.
Matt's got like 6.
Yeah, I've got 6. I'm performing. I'll tell you.
You're performing. So,
I know you can perform, Gary. I know you can.
We bulls have a tendency to gloss over the weaknesses, and I just think that's a bad thing. You have to be realistic. And I've never seen a bullish community that doesn't open up to the weaknesses. This was not a good quarter. And what Elon and Zach have to do is explain it on the call. If they can explain it and say, look, this is temporary because of X, Y, Z, as you pointed out, then everything's good. But, they can't just gloss over and say, oh, it's a great quarter.
I agree with that. I agree with that. But that's why we hang out with you, Gary. I mean, we need somebody to bring us back to reality. I mean, come on.
There's 7 of us on this call.
Gary.
It was 6 bulls until you came on.
Gary.
So our largest position, Ross, just like you.
Tell me about it.
So it's your largest position. You don't think it was a good beat. You think it was a soft beat.
A low quality.
What low quality? After looking through the report, what positive did you take out of it, if any?
It's a good question. They had a good number overall, I guess. They were up, but I don't know. It's hard for me to find the positive relative to expectations. I mean, they beat the bottom line number. Again, they did $1.05. The street was at $1.02, and we had, in our community, we had people in the $1.20, $1.30 range, which was crazy in hindsight. But $1.02 is, or $1.05 was okay, I guess, versus the $1.02. But it's nothing to write home about, that's what the market's telling you.
But I don't think it was going to be a write home about a quarter either. But what I'm saying is I was worried that they were going to do 95 cents. Okay. I was worried they weren't even going to beat because of the issues you've brought up. So that's why I'm excited, because my expectations, I guess, was worse than Wall Street.
Yeah.
So maybe my expectations were worse, and that's why I'm happy, where Wall Street expectations were absurdly positive or something. I don't know. That's so I was worried they were going to miss.
Yeah. Look, the one good thing is expectations were so bad after they missed on deliveries on October 2nd. So this was, this stock's down 30% in about 3 weeks. So the question I keep getting is it already baked in, or the bad numbers baked into the stock? We'll see tomorrow. As you said before, or I think I heard you say, Ross, after hours, it doesn't always tell you anything. But I want to see what they say on the conference call about fourth quarter deliveries. Right. I want to hear what they say about what happened in China in the third quarter. And I want to hear about this delivery wave smoothing that they're attempting to do. And that'll tell you what the stock's going to do tomorrow if they can be confident and transparent. I just don't know if they will, because sometimes they obfuscate things, as you know.
Well, like Elon's watching this call right now. So
hi, Elon. Hope you're good today.
Hi, Elon. Hi. You did a great job, even though Gary's expectations were higher than mine.
My expectations were pretty low, guys. I looked at that chart you guys sent around. I was at $1.09. That was pretty low.
I was at $1.10. So you were lower than me.
There you go. So anyway, I hope the call is good. I hope.
But what about this, Gary? I think there are positives in this, like energy storage. And what's your take on the massive growth in energy storage?
That's good, but it's so small. It's not a big number. It's a tiny
on
number.
An absolute basis, like for driving Tesla's business.
It's good that it grew so much. I'm just saying, relative to the EV business, which is what drives this, it's so tiny. Yeah. It's my worry that we're always getting caught up in these little things. And look, there's nothing wrong with the energy business. It's a good business, but it's small relative to the EV business.
Yeah. That's legit.
It's
was anything
relative
surprising?
To regulatory credits, which is kind of crazy. Like the gross margin is like 100 million. Regulatory credits are over 200. So it's exciting long term if you're willing to hold the stock for 10 years. But if for this quarter, Gary's right, it's like irrelevant. And the margins actually decreased quarter over quarter, which is a little disappointing considering Martin's comments about not being cell constrained anymore.